Welcome to a new update, and this one is going to be relatively short as we are going to cover the price action of Bitcoin. Yesterday we've had a pretty big day again when it comes to events on macroeconomic sides, geopolitical sides, and also on the crypto side. So we're going to discuss that a little bit, and we're going to look at levels to watch if you want to trade Bitcoin. But before we continue, make sure to hit the like button, subscribe beneath, and also make sure to check out the free trade letter in which we send 3 free trade letters per week. Also make sure to check out our free for a month for our premium membership if you join Bybit through our affiliate link. If you deposit more than $1,000 on Bybit, you also get $100 for free. Now, what did we see yesterday? We did have SBF with news again. Of course, slowly but surely FTX news is slowly draining away. BlockFi is probably going to file for bankruptcy, which was kind of expected. And further, it's remaining relatively calm, but it's still going to look for the coming weeks on what we know and what's going to happen when it comes to the contagion of the actual impact of FTX. But it looks like it's way less than what everyone was pretending to be, as FTX is smaller than what everyone expected it to be. Also, we've had the missiles that have been falling into Poland, we've had Trump coming back, and we've had PPI news coming in which there was a big miss after CPI on PPI as well, as it was lower by half of a percent, and also core PPI was 0.3% lower, which ultimately brings back up that the markets are running up. Inflation is getting dropped off quite fast, as PPI is already towards 6.7%, and also CPI has been falling off a cliff. So we get another one before the actual next FOMC meeting, and if that one is also going to be a miss and starts to continue falling, then we probably are into good territory for risk on assets to have some period of movements. And now when we're looking about or talking about risk on assets, what are the assets doing? Well, Bitcoin is definitely lagging behind what we can see on the chart here. Bitcoin is currently moving around the lowest point since 2020, in which we've lost the actual low that we've created here in June. We've got the Binance chart here. The actual low is a bit lower, maybe even on some other exchanges, and we are just swimming around 16.8k, while everyone is looking at shorting the markets at this point. What do we see even more? We did see that the dollar is falling down, eager for a slight bounce potentially, as we have been seeing this massive correction. We also see that the yields are falling down. Today we see a slight bounce as the CPI from Great Britain came in, which was way higher than expected. But overall the trend looks to be down on this side, as we have been losing this low. It is reasonable to assume that we are going to get a slight bounce and then continue falling when it comes to the yields if more macroeconomic data comes in that is expected to be or worse, or it's, in the case of CPI and PPI, better than expected. So what we're looking at when it comes to trading Bitcoin at this point is, technically speaking, from an investment perspective, you want to look at longs for Bitcoin at this point. And I think that the actual discount people get from the CME futures, also the discount that we have when we are looking at Grayscale Bitcoin trades, or we are buying Bitcoin through Grayscale, there's also a giant discount at this point, which hasn't been as big as it is right now, which means that there is a definite theory that we could be looking at a potential short squeeze, as everyone is looking for those shorts. In that case, the crucial level to break is 18.1k. So if you want to day trade at this point, I think you're overall looking for a flip of 18.1k, and then we can start targeting this high towards 22k, which sounds a bit off, but probably we're going to overshoot quite fast if we crack 18.1, as then we are back into this range. If we don't, we're looking on the downside, so then we're looking at 14k, 12k. Those are the regions that you should be looking at if you want to day trade there, and then you want to create a bullish divergence beneath the low here in order to have that trigger for definite swing trades at this point. So investment thesis, accumulate as much as you can. DCA, if you day trade, I'd wait for the flip of 18.1. Swing trade, same conclusion. And also if you're looking for a potential long on the downside, you're looking for the sweep of the low for a bullish divergence confirmation. And also if we're looking at the lower time frames, we can technically see that volatility is just draining down, and we're waiting for the potential breakout, most likely going to come when we crack 17.3, and if that happens, there's a significant chance that we're going to overshoot towards 20k. So that's the short update for today. I'm still in Dubai. Currently we are going to be moving towards a different spot as I've been here into the retreat, talking about finance and crypto with other guests in the Future of Finance roundtables in the Day One podcast. Now we're going towards a different spot downtown Dubai, and going to have some fun times over there. And in the meantime, you can find me on Twitter, you can find me on Instagram posting content. You can also find me in the group, which you can find in the description beneath. Make sure to hit that like button, and I'll see you again tomorrow for a fresh new update.